High yield bonds and NASDAQ both hit records. I think S&P 500 is going to be next and is really very close to new records. Gold may have tapped for a while, and I will show my position in gold miners ETF, which I think has a what's called bearish engulfing pattern. So I did take profits on that position. And we will finish with Dr. Copper, or copper, which could be predicting the end of Ukraine war and the very large reconstruction effort that is going to happen after the war finally ends. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, February 14th, 2025. As always, please hit the like button, subscribe to the channel, share this video. If you're not yet a subscriber, stay tuned. We'll be covering lots of various securities such as ETFs, foreign ETFs, large cap stocks, speculative securities, as well as gold related. If you're not yet a subscriber, consider following the link in the description and signing up. As always, I'll be using my proprietary MasterChartsTrading.com market indicators, which you can see on this chart. This green, blue, red, and yellow lines, they're available for TradingView.com. Currently, we're looking at S&P 500, which is literally very close to records. Today's high was 6,127, and previous high was 6,128. So we're 1 point away from all-time highs. So whatever is happening in the world, the market seems to like it. Now, I have shown in the past a chart from 1945 of Dow Jones Industrial Average, and during that time there was United States attacked Japan with nuclear weapons, and at that time stock market went up strongly. So this events that happen in the world sometimes have perverse effects on the way that the investors are behaving, and as a result, we're seeing record highs right now. For whatever reason, we're really not trying to figure out why things are happening. We're just trying to figure out what to do with those things. And as far as stocks are concerned, we're basically holding. So we want to be buying around the blue support resistance line, as we did back in 2023. And again in late November of 2023, and basically since then there was no opportunity. Why do I want to be buying around the blue line? Is because basically the risk is lower at that time. Of course, there is always risk, but the risk of buying at all-time highs is higher than the risk of buying on a pullback. So a pullback for S&P 500, where I would become interested in buying, would need to happen around 7% pullback from current levels towards the blue support resistance line is where I would be considering buying. But it doesn't seem like it's going to happen, and most likely will break to new records. High yield bonds as well. We're currently looking at high yield bonds on weekly time frame. So as always, I've shown this chart. I'm showing it again. So down below here we see what's called a correlation coefficient. So in other words, how closely does S&P 500 follow what the high yield bonds are doing? And high yield bonds are usually doing very close to what S&P 500 is doing, and you can see it on this chart. High degree of correlation. So this indicator down below here spends most of its time in the positive territory. In other words, high yield bonds and stocks correlate highly. They're doing the same general thing. So when high yield bonds, we're currently looking at high yield bonds on daily time frame, when high yield bonds hit all-time highs, I think that is a good sign, because we want to see basically a risk-on perspective, and high yield bonds are much more riskier than, for example, treasury bonds. Treasury bonds actually have a somewhat negative correlation to the S&P 500. And usually treasury bonds are bought when investors are not feeling good or feeling anxious. In this case, we're seeing the opposite. We're seeing high yield bonds outperform not only S&P 500 but obviously the treasury bonds as well. And so when we're seeing such a picture, I would say that we're in an environment of high, or rather, we're in an environment where investors feel comfortable taking the risk, and indeed, risk is on. What's called, we have a risk on currently, not risk off. So high yield bonds hitting records is a very good thing, and I think stocks S&P 500 will be next. In fact, QQQ, the NASDAQ 100 ETF, as well as XLC, also known as Communication Services ETF, and it has things like Meta, Google, AT&T, Disney for some reason. Because it's they do streaming as well. T-Mobile, Verizon, Netflix. So anything to do with streaming, etc. Communication services. That's an all-time high, just hit. So together with QQQ, with NASDAQ, new records for technology, heavy technology sector. QQQ, XLK. Technology sector ETF with Microsoft, Apple, Nvidia. Well, Microsoft and Apple really taken 50% of this ETF, is also very close to records. So good news all around. Risk on perspective is continues. We want to see we are bullish on stocks. We want to be buying stocks, and we want to be buying them on a pullback, and we've been doing basically that. So if you've been trading using my system, then you should be in great shape. In fact, I want to show you a trade, recent trade. Roku, for example. Yeah, this one was really nice recent trade. So basically, this is what we do. We look for a stock which is breaking out above this blue support resistance line. We buy it on close above it, and then boom, now we see a nice move higher. So for example, Roku just popped. Let's see it. Roku just popped 28% from when we alert was sent. So congratulations if you were able to open Roku, and of course don't forget to sign up by following the link in the description. Let's switch gears. We're currently looking at the dollar currency index. Dollar currency index recently in mid-January hit a 2-year high, and then this candle from 3rd of February here, and I was already like I wrote this here at the time on 3rd of February, so a couple of weeks ago. Is this topping? So it sure looks like dollar may have topped, or at least for a little while, and now we're seeing a pullback. So where is the pullback occurring towards? It's occurring towards this blue support resistance line, and before we can see that this was a good place to buy. So we're going to be waiting until dollar actually touches this blue support resistance line, and then we will consider whether or not we want to be buying at this time. We don't yet know if we want to be buying. We want to wait until the actual bottoming pattern is in. As of right now, we'll want to wait and see. Now, normally dollar and gold move in the opposite direction. Right now, we have weird situation where both dollar and gold were moving up together, but I think gold currently may have at least temporarily put in an intermediate top. So we're currently looking at gold XAU divided by USD. Last trade was just spectacular. So if you went ahead and you opened back in December 2023 or early 2024, so about a year ago, this was actual back in 2024 February, it's exactly a year, gold is up 45%, so big congratulations on that. Now you can also trade gold, or rather put positions up in gold using gold miners, GDX. In fact, this is what I've been doing. I hit, or rather I went ahead and I opened a position on gold miners just a few weeks ago in mid-January here, and it went to it's approaching multi-year highs. And I today actually I was looking at this candle and I'm not sure I like it. So currently we're looking at this latest candle from today, February 14th. It is completely engulfing the previous candle from February 13th. In fact, it's engulfing several previous candles. So definitely a bearish engulfing pattern. Now, is it going to actually be the top for gold miners? It's possible. So I don't really want to take too many chances. I went ahead and I sold about a quarter of my position. I bought back in mid-January here, late January. I sold about a quarter position, and I'm going to be waiting to see what happens with the rest of the position, and then we'll go from there. Finally, I wanted to touch base, finally I wanted to look at copper. Also call it Dr. Copper. So why does copper deserve such a honorific? Because there is some people like to believe that, in fact, let's go ahead and look at it from a perspective of correlation. So we're currently looking at copper futures, HG1 exclamation point on weekly time frame. Just means that each candlestick is a week's worth of activity. And down below here, once again, we see what's called a correlation to the S&P 500. So does copper do the same thing as S&P 500? And it's not as clear as high yield bonds. Okay, so we're going to zoom out, pretty far out. So if we look at high yield bonds, junk debt, you can see that correlation is very high. This yellow indicator spends most of its time in the positive territory. If we look at copper, HG1 exclamation point, the correlation is not nearly as positive. In fact, we have quite a bit of correlation that is actually negative, if anything. So some people do believe that copper is a good indicator of where the stock market is going. I personally don't really subscribe to that theory. However, from a purely I guess fundamental perspective, we can say that copper futures or copper getting more expensive is an indication of one of two things. One, there's a possibility of supply disruptions, as for example we had during the pandemic. We had supply disruptions of various things. For example, lumber went through the roof. Are we expecting to see supply disruptions of copper? I am not so certain. I don't think I'm expecting supply disruptions from copper. I am hoping that what we're hearing from the political perspective is that there is now at least movement in the direction of negotiations in the Ukraine war, with President Trump and current administration finally moving with aggressive force to rein in the crazy person in Kremlin. And Americans don't really see, or rather, let me rephrase it. what I understand is the opinion about Putin is that he is a reasonable person, and I don't think he's a reasonable person. I think if you listen to some of the, I can speak Russian, so I listen to some of the Russian-speaking analysts, and one of them is basically saying that the only his, I don't know, life's ambition would be to restore Soviet Union to its former glory. And of course, if you can remember Soviet Union, you know, Ukraine was part of the Soviet Union, Belarus was part of the Soviet Union, etc. So also the Baltic states were part of Soviet Union. So I'm hoping that reason will prevail and Putin will actually like stop fighting. However, he has done crazy stuff in the past, as for example, he invaded Ukraine in 2022 already, where nobody in the right mind would have done it, but yet he did it. So there is a chance that no matter what Trump administration does currently, Putin will not agree and the war will continue. So that is also a possibility. However, I am again hoping that Dr. Copper is correct and we're not seeing potential supply disruptions, but rather an increased demand due to potential reconstruction effort. And that's it. On this optimistic note, I want to say thank you for listening. Please head over to MasterChartsTrading.com. Click on sign up. So sign up one of the products. I have the trading indicators, which you can see on this chart, this green, blue, red, and yellow lines. They're available for TradingView.com. Open TradingView.com free. You can open a free TradingView.com account, come back to my site, Master Charts Trading, sign up here, and I will open the door for you on TradingView.com. Yes, it sounds convoluted, but that's the only way you can do it. And once you get it done, it's really easy. And actually, even getting this done is super easy. All you gotta do is just open the account and send me the information. Not your password, just the name. Newsletters, so I send out daily alerts as well as weekly members only videos that you will see, the members will see this week. So for example, lots of various securities that we're trading, and as I just showed one example of a very nice trade, Roku, 28% up, Cloudflare, huge move in our favor, as much as 88% up actually, for example. So several very nice moves. If you are not yet a subscriber, consider signing up. And of course, the best deal is to get both trading indicators and newsletters. And you can get either yearly plans with the equivalent of $49.95 per month, or you can get a monthly plan at $59.95 per month. All of the plans come with free 7-day trial, so you will have 7 days to cancel should you so desire, but I tell you, not a lot of people cancel, and people continue using my services for many years to come, and are very happy with them. So do consider signing up. Again, thank you for watching. Have another great trading week. Bye bye.